Hey everyone, welcome to the KE Report, another daily editorial, this time chatting with Dave Erfle, founder and editor of the Junior Miner Junky. We'll quickly touch on the gold breakout, again to all-time highs. Silver also touching right above that $33 level. And then we're going to focus a bit more on M&A. I know we've talked a fair bit about M&A, but look, last year was a big year for M&A. This year is already off to a pretty good start, and we'll get Dave's thoughts on what stocks he thinks could be next in the takeover category. So, Dave, let's start off with gold. Look, gold right now, as we're chatting, 28.73. This move in gold, it really just seems to be now a continued momentum trade. Whatever news comes out seems to be mostly weighed as good news for gold. And even through the fourth quarter of last year, when the stock struggled, gold really didn't do much. It dropped a little bit in early November, and for the rest of the year, it moved sideways, setting up, again, another stronger base, which now it's moved even higher from. So, Dave, your comments on gold seeming to be a momentum trade and having the wind at its back.
Yeah, I call that the eye of the perfect gold storm. What happened right before, when it was known that Trump was probably going to win the election. Gold peaked at the end of October, and then it had like a 3-month consolidation correction of about 10%. I call that the eye of the perfect gold storm because we had a move of of close to $1,000 from October 2023 to October 24. And then we had that, the eye of the storm, which was that correction. It was a healthy correction. It was a healthy consolidation. Gold had gotten extreme overbought. A pause to refresh was basically needed, and technically perfect action. I mean, I was talking about that symmetrical triangle that gold was consolidating in for that 3-month period. And now it's breaking out of that triangle. And the measured target from that triangle is also the measured target from the cup and handle breakout from 2100, which is $3,000 an ounce. And it's moving closer to there pretty quickly. So, the Trump presidency, the chaos and volatility that Trump is causing has been really good for the gold price.
Well, and Dave, when we look at silver responding and GDX finally breaking above 40 and GDXJ finally breaking above 50, hey, it only took 28.75 gold to get it all there. But when you see those kind of moves and things starting to trickle down into the juniors, do you think that we'll have momentum on multiple fronts from earnings reports, from M&A, but also from the juniors just getting a re-rating or just ounces in the ground getting a re-rating?
Yeah, I mean, it's no coincidence that we have right now as we speak the GDX getting over that key resistance level at 40, GDXJ getting over that key resistance level at 50, and silver futures getting over that key resistance level at 33, because they've all lagged the gold price together. And I've talked before how their charts kind of look the same and their cup and handle patterns. So see, we had that cup and handle breakout, 13-year cup and handle breakout in the gold price. Well, silver and GDX and GDXJ have also formed cups about 4 years in duration, and they're in the process of forming the right side of the handle. And once silver gets above 35, that will be like a 3-4 month handle. And once GDX gets over 43 and GDXJ gets over 54, that would be like a 3 to 4 month handle breakout. And then the targets for the GDX would be 60, and for the GDXJ, I think would be around 83 to 85. So I was hoping to see monthly closes above 40 and 50 in January. We didn't get that, but the momentum, as you said, is continuing to carry here, and it's now starting to drag up these juniors. A lot of these juniors that I follow and some of them that I own that are optionality plays that really haven't done much are really starting to move now. I've noticed also there's a couple of them that I really like. They're on my watch list that really haven't proven they've got the access. They haven't shown the market that they have the access to capital. They got the great projects, but they haven't shown the market that they've got the access to capital. They're already starting to move before they've proven that to the market. So it's starting to look really positive here. And it's not a coincidence that it's happening as GDX and GDXJ are getting above those key levels.
Hey, Dave, you're absolutely right. Money is trickling down to the juniors. I remember last year, 2 years ago, when we were talking about ounces in the ground being $5, $10. now that has seemed like it's revalued. There are a couple stocks still trading down there, but most of them have at least doubled, I think, in terms of market cap for ounces in the ground valuations. All encouraging to see. And some of the takeovers have been done at quite lofty ounces in the ground valuations compared to the last really 15 years. Let's talk about the M&A though, in terms of what stocks could be next. We saw a lot of M&A last year. We already have seen some early on this year, and one thing everyone's pointing to is Newmont now fully divested from the projects it wanted to sell. It brought in more money than it thought that it would or initially intended. Do they come back to the table? What stocks get taken out in your eyes?
Yeah, now that Newmont's completed that you mentioned of the non-core producing mines, and by the way, they announced to the market they were expecting to get around 2 billion. They got more than twice that. They got 4.3 billion. And basically they wrapped up those sales that we talked about last week with Discovery getting Porcupine. It's like they gave away that one. It's almost like we want to get this over with. Let's just get rid of this asset. And the Discovery stock price has really responded in kind. But as far as up stocks that I'm looking at that are possible takeovers, there's one that I owned in the past, and I think it was a couple of years ago. I got into it. I got into it a bit too early, and ended up selling it in my newsletter, and that's Perpetual Resources. And now it's got government backing, it's got access to capital. I think that's one that might be the next possible candidate for the next takeover because they've got that antimony credit, right? And that's why the federal government is really interested in it because antimony is used in war. So that stock is really started to move and it's acting like it's in play. Another company that I own and that's in my top 10, I've had it for about a year or so, is Skeena Resources. Now, what's interesting about Skeena is they've yet to even become fully permitted at the SK, but SK Creek is such an attractive asset, is such a high margin, high grade asset that they've been able to raise all the money and come up with a complete finance package to build this mine with some overage full at least a year ahead of them getting the environmental permit. And this is in the Golden Triangle in British Columbia, where it's notoriously difficult. Not I wouldn't say difficult, but it just takes a long time to get these permits. And they started talking about making some headway in cutting down the times to get these permits. But Skeena getting this finance package a year, at least a year ahead of this permit is very positive. And I'm hoping as a shareholder that it doesn't get taken out soon because I'd really rather see it run a while on its own because I still see it as extremely undervalued.
Yeah, Dave, I was going to ask you just that, just because I'm also a shareholder of Skeena, and I'm hoping that they can run because they also have antimony. They also have other projects not even factored into the economics yet, like SNP and Hoodoo and KSP and the Albino Lakes. So they have some other, and even the SK Deep. So they have some other value drivers where they could still keep running into this higher metals price before a takeover offer. But that brings up an interesting question. Would you like to see companies try to build these projects on their own and bring in the right teams? Or would you rather see a bigger partner come in and at least JV it with them to help them build it? Or would you rather just see a flat out takeover as your exit strategy?
Well, it all depends on A, if I own it, and B, what stage they're at. And a lot of these companies, they know they at least have to go through the motions of them building it on their own. Hire the right people, raise the money. Okay, we're going to build this on our own. But deep down, they want to get taken over. But, it all depends on the stock. Uh, I have several companies in my portfolio that I own and that I cover in my newsletter. They're trading at 52-week highs, and some are even at all-time highs that I still think are massively undervalued. And some of them are even acting like they may be in play. And I'm hoping that they don't get taken out here because, like I said earlier, I'd like to see them run on their own first. What the most recent takeover I had in the portfolio was O3 Mining getting taken over by Agnico Eagle. One part of me as an Agnico shareholder in my IRA account was happy to get it so cheap. But for my subscribers and myself and my newsletter, I was not happy with how cheap it was taken out at because when we got into the stock originally, This is the reason why I got into it. I was expecting Ignico to take it out, but I was also expecting Ignico to take it out at a much higher price.
What about some of the mid tiers? We keep pointing to the mid tiers as needing to acquire some projects, build their pipeline if they do want to get bigger. Do you see that happening, or do you see more mid tiers combining with other mid tiers to become immediately larger producers?
That's the thing, right? I think that's going to happen. I mean, you've got a whole slew of them, right? You got Oceana Gold, Orla Mining, Equinox, Torex, Dundee, New Gold. There's a whole bunch of them, and some of them are synergistic with other mid-tier miners. And if they combined, that would result in them having a stronger balance sheet, providing better access to capital, a better growth profile, improved credit ratings. So I think this is going to happen. We're really going to see M&A pick up now, that especially if the gold price gets over $3,000 an ounce. That's a psychological level. I mean, once the gold price got to $1,000 an ounce, it took a while to get above it. We had a strong correction after it got there, but once it got above it, then it really started to move towards $2,000 an ounce. And same thing with 2000. It took 4 years to get above 2000. And now that it's gotten above 2000, it's moving quickly to 3000. So then, the market starts to factor in, hey, these strong bases at higher levels are become much stronger, meaning like 2500 now is a much stronger base. And look what happened when gold went above 2800 here a couple days ago. It ran above 2800, it came back down to test it quickly, and then it hammered from 2800 just as fast as it tested it and started going right back up again. So that's why I think we're starting to see a lot of these juniors start to play catch up, because the market's seeing, hey, a lot of these projects with these base case numbers that are lower, and then they use these base case numbers that are higher, they're really starting to look attractive.
Well, and Dave, I think we have seen the mid tiers very active with acquisitions of either single asset producing companies and or development projects. I mean, let's just think back the last year or so. We've seen B2 Gold take over Sabina, Silvercorp take over Adventist, Caliber took over Marathon, Orla took over GSV, and then grabbed one of those Newmont divestitures at Musselwhite. You saw Alamos take over Argon. I mean, there's a lot of mid tiers that have been doing the heavy lifting in M&A. Shouldn't be people be maybe not just setting their sights on, is Newmont or Barrick going to take us out, but what about the several dozen mid tiers that could actually be the M&A champs?
Absolutely. Yeah, but the big leverage is in those single asset juniors that are now starting to get some love from the market. There's extremely depressed. They've been ignored for so long, and they're so undervalued. That's where the extreme leverage is. I mean, if you get a merger of a couple of mid tiers, there's not a leverage in that. There's not a lot of leverage in that. So in my newsletter, I like the big leverage with the least amount of risk. And I believe that's in a lot of these single asset developers where their projects are really starting to look attractive now.
Okay, so then what about the exploration plays? I know we've largely been avoiding those simply because there's so many projects out there with resources, and pretty much every resource needs to make money at these current prices. You would think that majors would really move into those first. Well, they always do, rather than moving into any sort of exploration play. But do any exploration plays have your interest here, Dave?
Yeah, I've got a few on my watch list. One just popped the other day, Goliath Resources. They hit an extremely attractive hole, and then they had McEwen come into the stock with more money. So that stock's doing really well. But it's in the Golden Triangle, and I already have I own three stocks and cover three stocks in my newsletter in the Golden Triangle. And I don't like to overweight too much into one sector. That's another thing I have to look out for.
Well, Dave, let's talk jurisdiction and how you diversify. Like you say, you don't want three or four in one jurisdiction. Are there any jurisdictions that you think are hot in an area you want to be, or any jurisdictions that you're just flat out avoiding?
Well, I do like the Golden Triangle. I have three stocks that are in that jurisdiction, but I think Mexico is going to start heating up now, because I think Scheinbaum's proving to the market that she's more business friendly. She's already given that permit to Alamos, and I think once they start dishing out more permits, underground permits to other companies, I think that sector is going to start to get hot, and it's really undervalued. A lot of the companies that are waiting for permits in that jurisdiction.
All right, Dave. Good comments as always. Look, there seems to be a lot of opportunities out there in the resource sector. A lot of these stocks are revaluating at their own times. Still a lot of resources out there, and still the potential of continued a lot of M&A, which we have seen in this sector. It's clearly a bull market, so then that strategy needs to be play the bull market, be at least somewhat allocated to it, and make sure you're still in the right stocks to take advantage of these much higher metals prices. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Click the link in the show notes. And Dave, we'll chat with you next week. I hope you have a great rest of your week.
You too, guys. Looking forward to talking to you next week.